Good morning to Dr. Moha and my fellow friends. Today, we from Group 12 will like to present our group assignment on SUPERMAX Corporation's BERHAD. SUPERMAX is a company that provides health and care products and services to us. We will discuss and share our result on this company between 2018 until 2022 and make comparison with top glove company. This is our group member. First, my name is Clarence Blawan. Next, Claudia. Next, Irene. Noiza Shakira. Raf Fairuz. Tiong Jun. Woon Weki. Lastly, Zulaika binti Wahab.
Greeting to Doctor. I'm Irene Toshuhong and also the first presenter. Our main company is SUPERMAX and the company that we choose to compare is Top Glove. And today, I'm going to present about the comparison of current ratio between SUPERMAX and Top Glove. As we can see from the line chart, SUPERMAX and Top Glove were the most liquid in 2022 because its current assets was the most highest, which is 4.95 times and also 8.15 times. These increasements caused by the company's accounts receivable being high, current liabilities being low, and also influenced by external factors such as changes in consumer demand, price dynamics, and also economic trend in 2022. However, the lowest current ratio of SUPERMAX and Top Glove was in year 2018. The reason to cause the ratio to decline is an increase of short-term debt and decrease of the current assets. Obviously, Top Glove is most liquid from 2019 to 2022 because its assets was more than the liabilities compared to the SUPERMAX. That's all for me. Thank you.
My name is Clarence Blawan Boniface. My number matrix is BB221101110. Next, account receivable turnover ratio. Account receivable turnover ratio is an indicator of number of days required for a firm to collect its account receivable. The higher turnover per year, the faster the collection of firm's credit accounts. To calculate account receivable turnover ratio is by annual credit sales divided by account receivable. Based on the graph, we can see both companies show upward and downward trend from 2018 until 2022. The blue line represents SUPERMAX company and the orange line represents Top Glove company. Both firms were the most liquid in the year of 2021, which is SUPERMAX is 9.91 times while Top Glove was 28.89 times. However, SUPERMAX company having lower account receivable turnover ratio on 2020, while Top Glove having lower account receivable turnover on 2018, which is 6.53 times. From 2018 until 2019, we can see on the graph both companies increased continuously, but on 2020, SUPERMAX are going some decreasing on the account receivable turnover ratio, which is 6.25, while Top Glove continued to increase from 2019 to 2020 until 2021. On 2020, SUPERMAX continued to increase until 2021. Start from that, their receivable turnover ratio becomes stable until 2022. That's all for me. Thank you.
My name is Claudia and I will present the total asset turnover ratio. Total asset turnover is used to measure how efficient a firm uses its asset to generate sales. So as we can see from the table and graph, we can see that both companies, SUPERMAX and Top Glove, were undergoing an upward and downward trend in 2018-2022. But here I only want to focus in 2021 and 2022, where in 2021, SUPERMAX and Top Glove recorded the highest ratio, which is 0.97 and 1.67 respectively. Meanwhile, in 2021, SUPERMAX and Top Glove recorded the lowest ratio, which is 0.45 and 0.69 respectively. This means that in 2022, both companies are not managing their assets well to generate sales. This is because Top Glove only generates 0.69 ringgit in sales per 1 ringgit of assets, meanwhile SUPERMAX only generates 0.45 ringgit in sales per 1 ringgit of assets. Overall, Top Glove manage the firm more efficiently compared to SUPERMAX because they can generate higher in sales over the 5-year period of time.
Hi and Assalamualaikum. I am Nur Izzah Shakirah binti Muhammad. I would like to present the fixed asset turnover ratio. As you can see in the graph, based on the fixed asset turnover ratio, SUPERMAX and Top Glove went upward from 2018 to 2021 and the decrease in 2022. The highest ratio for SUPERMAX and Top Glove is 4.112 and 3.01 times, respectively in 2021, before it is going downward in 2022, which is 1.36 and 0.93 times respectively. This indicates that SUPERMAX and Top Glove manage the use of their fixed assets much more efficiently in 2021 and become less efficient in 2022. Overall, SUPERMAX shows a better fixed asset turnover ratio than Top Glove, which indicates that SUPERMAX manage the use of its fixed assets such as its property, plant and equipment for efficiently over a 5-year period of time.
Good morning, doctors, Sir FD and friend. My name is Tunjunable Betty BB 2211-0277. The graph shows the operating profit margin and SUPERMAX and Top Glove for 2018 to 2022. SUPERMAX and Top Glove were the most liquid in 2021 because their operating profit margin was the higher at 17.81% and the 61.24%. By the lower operating profit margin was the in 2018 40.15% and of SUPERMAX 60.57% for Top Glove in 2022. The difference between SUPERMAX and Top Glove operating profit margin between 2021 and 2022 was 11.82% and 54.76%. The operating profit margin ratio increased at 17.1%. However, for here, 2000 SUPERMAX after paying for value for tax code and Top Glove is 61.24% profit increase to 2021. SUPERMAX and Top Glove also explained as the person for seller and then showed the efficiency of the SUPERMAX and Top Glove, controlling the costs and expenses. Is it because the companies are the return assets for standard operations and do not include units or one-time transaction? Using a purposes, FICRE is very useful for complex SUPERMAX against Top Glove. The operation results of the one company offer values revenue sequential.
Hello everyone, my name is Wun Wei Chi. Today I will present the analysis ratio part, which is return on equity. Based on the table and the graph, we can know that the higher return on equity for SUPERMAX and Top Glove is in year 2021, which is SUPERMAX has earned 18.29% return on equity, while Top Glove has earned 138.97% return on equity. So that the higher return on equity is better when the net income is extremely large compared to the equity because the performance of the company is good. Besides that, based on the overall return on equity, the SUPERMAX has received a lower return on equity than Top Glove each year, which is from 2018 to 2021. The lower return on equity means that the company has made a poor decision making on reinvesting capital in unproductive assets. However, in 2022, the return on equity for SUPERMAX is higher than Top Glove, which is SUPERMAX has earned 15.05% return on equity, while Top Glove has earned 5.28% return on equity. So that it means the SUPERMAX has more efficient management in generating income than grow from its equity financing. So we can conclude that the return on equity for Top Glove is better than SUPERMAX. That's all for me. Thank you.
Good day to Sir Moha and Sir Eric. My name is Rafairus. My metric number is BB22110224, and I will be presenting the market value ratio, specifically the price earning ratios. As we can see here, the SUPERMAX, as well as the company that we have compared it to, which is Top Glove, their price earning ratios are inconsistent from 2018 until 2022. Now, from the graph, we can see that SUPERMAX and Top Glove had a rise and decrease during those 5 years. And also from the graph, we can see that SUPERMAX, which is the blue line, is significantly lower than Top Glove. The most noticeable difference is during the year 2020, as the price earning ratio for SUPERMAX is 19.92 times, while the Top Glove is 121.12 times. Now, this ratio was their highest amount from both company, respectively. This shows that SUPERMAX is considered an undervalued item, while Top Glove is an overvalued item. Investors would consider investing more on Top Glove rather than SUPERMAX because with a high price earning ratios, investors believe that the stock's earnings will increase in the future, while having a lower ratio is believed that the company's profit will decline. However, a relatively lower price earning ratios would mean that investors would have a lower risk, while a higher ratio would mean high volatility, which indicates a high risk. Thank you.